has got, you know, a lot of scammers and all that, and like it's just hard to get the right content, right? But when I see more Zambians coming on board trying to get something of value, I really like it. I want more Zambians to see the power of Forex. Not only Zambians, I also want other people from other countries. We have Nigeria, Zambia, indeed, South Africa. Okay, Lesotho, South Africa. It seems Nigeria and Zambia, we have quite a number. Then followed by maybe South Africa. What else? Maybe Botswana. Yeah, Lesotho is there. Chile. London, we have one person. Yeah, anyway, I think it's time. It's about time. We started the meeting. Let me just see. Okay, 59. We're at 59. 60. We are starting. Let me just move this. Okay, we are exactly 50. We are exactly 60. Okay, we have Zambia, Tanzania. Okay, finally, we have one person from Tanzania also. Mozambique. Okay, another one person from Mozambique, which is a very good thing. I want to see somebody from Zimbabwe, Zim. Yeah, you know, the one thing that is about Zimbabwe, I would just love to hear the story of Robert Mugabe and all that. Yeah, I don't know much, but I would love to hear the story and all that. Well, yeah, I think we'll be getting started. I hope we cover as much as we can in this session. Yeah, so let's get started, guys. If anything, I will have time for questions and all that, but I'm gonna try to analyze. I don't know how many assets I'm gonna analyze. Okay, we have another person from Namibia. I don't know how many assets we're going to analyze, but I'll try by all means to cover as much as I can. But you know, we're going to start with Boom 500. Oh, we think you're from South Africa because you sound like South African. Really, guys? Do I sound like I'm from South Africa? I don't know. Maybe it's because I interact with a lot of South Africans and all that. Because South Africa has quite a number of traders as compared to Zambia. So mostly, you know, interacting with South Africans and all that. Yeah. So anyway, let's get started. So here, what we're gonna do is we are going to start dissecting the assets one by one, and I'm going to be telling you how I analyze the markets. Sometimes I usually get the question to say, Bliss, how do you analyze the markets? So like, it's very much difficult for somebody that has just started basic price action to understand how I analyze the market. It's quite hard because I don't just trade based on the patterns. I don't just trade based on support and resistance. I don't do that. I have mastered quite a number of techniques that I use. So you find that in one analysis, I've used about 4 techniques. So it's very hard for somebody that doesn't know how to trade to analyze, to just say, okay, here he just used price action. No, I don't restrict myself to one analysis, or rather to one trading methodology. I have quite a number, and those methodologies that I use are the same methodologies that I teach to my students, so that they're able to see when I post an analysis, even when I'm not available, people are able to enter trades and able to take trades. Yeah, so okay, let's just see. Okay, who is your mentor? I don't have a mentor, guys, but I have a spiritual mentor who is no other than Pastor Frederick Kaluma. His Zambians, in regards to Forex, I don't have a mentor. I'm somebody that has been self-taught, although I have to give credit to one person from Ghana. He's quite unpopular, and this guy is mysterious. He's called Dada Joe. I remember the time I started learning about the Forex thing. I could study on my own. It was self-study. And then I met this guy who really explained things in a very simplified format. And yeah, I got myself out there. I started understanding things in the right way. So like, the person you begin with also matters, ne? He also matters. So for me, he was like the one person that really showed me how these things really, he gave me that good understanding, right? Yeah, so this person is Dada Joe. He taught me just the basics. Then I had to pick it up from there because I know success is a personal decision. Yeah. So without wasting much of the time, we're going to start. So usually when we look at this, people would ask me to say, Bliss, how do you analyze the market? Which time frame do you use? So really, when you analyze the market, you don't have to restrict yourself to one particular time frame. That's not okay, because you miss out the bigger picture, right? You miss out the bigger picture. So for me, I start with a daily. Every day when I wake up, I have a team of mine. Every day, 08 hours Zambian time, we wake up and analyze the charts. So the first things that I'm going to look at, I usually start with the daily, then I go all the way to the lower time frames. Then I use the 15-minute time frame for entries. Why do I use the 15-minute time frame for entries? Because price actually reacts faster in the lower time frames. Now, I restrict myself to the 15-minute time frame for entries. Sometimes I go to the 5-minute time frame because it's boom and crash. However, price is fractal. When it comes to other volatility indices, with the knowledge that I give, with the knowledge that I have, you can trade from any time frame. So this is actually a technique that we use. If for instance, as I'll start explaining here, you're going to see how I use the technique, right? So with other assets, I can go as low as the 1-minute time frame and put an entry. This is why you find that, for instance, if I have to enter from here, it will be like a sniper entry and my stop loss will be very minimal, like maybe let's say 2 pips, 3 pips, and I would catch all this movement. So you see where I'm risking about $4 and I'm getting about 200 and something or 300 and something, even more. So now this is something that didn't come in a day. It's something that I developed over time. I'm still developing myself and I'm still working on myself. I'm still trying to learn more. So here is how I analyze the market. So in order to start with, I start by analyzing the IFC. So from here, market structure, we can see it's a downtrend. Market structure plays a very important role when I'm analyzing the market. So the IFC candle, I would actually go for this one on the daily. So this should be my target when I'm looking for an entry on a sell. It's something that I teach in my groups. That's an IFC. So now we can see price actually reached the IFC candlestick and it has started going down. So we don't just enter based on the let me just I think try to mute everyone. Let me just try to mute. How do you guys mute every person? Oh, mute. Oh, okay. Okay, I would allow you guys to to unmute yourselves when ready. So we're about 70 now. Yeah, we are about 70. Let me just see if please mute your mic. Okay, mute these guys. Okay, yeah, I have to mute. Yeah, I have to mute. This meeting will end in 10 minutes. Okay, I think this meeting will end in 10 minutes. I might just consider buying, an upgrade. So it's gonna end in 10 minutes, but I'm gonna start another one if it ends. I have to show you these guys, right? Yeah. So once it ends, I'm gonna send you another link. Okay, so what I basically do is I look for target entries, target levels. If the market is going up, or rather, since it's in a downtrend here, it's in a downtrend because I'm able to see this. Because I'm able to see this. Because I'm able to see this market structure. You can see how market structure is playing out. You can see that, right? What do I expect from here? I expect another movement to say here. That's something that I anticipate. So really the market is about the probabilities. So for me, when I enter, I open the charts, I look at the probabilities, right? I work with probabilities. I would analyze and maybe give to say two things can happen. When the market reaches here, this can happen. When the market reaches here, this can happen. So you have to stipulate the rules when you open the chart. And for me, I stipulate the rules. So here, this is the level I spotted. And what do? Since I can't make an entry based on the daily time frame, I don't know, these charts. Bliss, screen is stuck. Is it just me or what? Your voice is quite low. Oh, my voice is low. I don't know who else is having challenges, getting my voice. Okay, my voice is perfect. Okay, yeah, so since I've identified this candlestick, which is an IFC, this would be my target entry, and I missed this entry, guys. I missed this entry. I missed it with my team because I wasn't available today. I wasn't available. Let me just see. Your screen is stuck, I think. Voice is perfect. I can hear you. Okay. How about my screen, guys? How about my screen? This person is saying my screen is stuck. Oh, the screen is still stuck. Okay. Since the screen is now, it's fine, still stuck. Fine, move your mouse. Stuck. Everything is back to normal for me. Okay, your screen is fine. Okay. I think we're fine. We're fine. It's all right. Okay, your screen is good. Tell him to check his network. Okay, screen is fine. Just indicate while talking. Thanks, boss. Okay. Yeah. So this is my target area, and I located that candle, and at first, this candle was tested. This zone was tested as an IFC level. It was tested. So since price came back down, it didn't break this low. It didn't break this low. So we might have a situation since price jumped here. It left a gap. I'm gonna talk about the gaps and all that, and how I would look at price. The gaps and stuff. This is not really like a lesson, but I just want you to have a view of how I look at the market, and from there maybe you can know how best to approach the market. So this low hasn't been broken yet. So I'm looking at if this market doesn't violate this, I'm looking at it going all the way down. It will pass this low and eventually go down like that. However, let's start the analysis. So here, since I've identified this level, I've also identified this. We start from there and we make that simple trend line, right? If at all the market has to change direction, then it has to bounce from there. So I would simply say here the market would come back and hit this level, right? And what is this level? This level has got an IFC candle, right? This level has got an IFC candle. So meaning there is a high probability that the market will change direction from here. But if it doesn't, then it has to come back to come all the way to this level. We also have an IFC there, an IFC candle. I know people would be asking, what is an IFC candle? Really, I'm not teaching today. I'm not giving a free lesson. But for those that are my students already, they know what an IFC candle is. So I'll mark out my levels of IFC and all that. Then I go on the H4, guys. On the H4, let's dissect this asset together, and we see all the possible possibilities. And from here, we'll come to conclude to say, okay, we are now at this particular point, and here is what we're supposed to do, right? Okay, we can see this trend line that I made on the daily. It's still significant on the H4. Yeah. Simple price action here, everyone would understand to say, okay, this is why Bliss made the trend line, right? Apart from that, since we marked the level on the daily, let's also mark on the H4, right? So on the daily, it's showing us, I don't know, okay, I don't know their charts. Okay, institutional candle. Okay, right, yeah, both Israel knows. Yeah, he's in my group, and I'm very much proud of him. Okay, yeah, so we can see this is the daily. Now we can't base our entry based on the daily. This is the daily IFC candle, or this zone. Now if we have to take entries, we can't take entries and put our stop loss there above there. No, this is too much. This is too much. The idea is to risk as small as a very small amount as possible, and yet have good returns. You see my target here, my TP. You see, it's on a trend line, and it's also an IFC on the daily, right? Yeah, so from there, we're going to go on the H4 also and identify the same things. I'm going to identify the same zones, the same levels, right? Okay, so on the H4, here is the thing. I'm going to identify one IFC candle, which is right there. Let me just use a different color. Let me just use a different color for this one. Let me use red, okay? Let me use red. We have an IFC that is there, right? Let me just put a straight line so that we can see where it went. Okay, the red line, that is, let me just type in so that, I always ensure that I type in the things that I'm identifying on the market, so that even if the market, was to make another move, I would actually follow through, right? This is very much important, and I would advise that everyone does this. This is a daily. Then we have the H4. The H4 is there. H4 IFC, right? We have it there. So now let's see. You don't just go where the market is. So you first start by going, to the back a bit, just to understand how the market is moving, right? When you go behind, or either back on the charts, it gives you, that better understanding of how the market is moving, so that you are able to predict where it would go once you reach where the market price is. So from here, this is an IFC candle, and we can see this was the first retest, right? Somebody that has been taught by me would have caught this movement, and they could have put maybe a stop loss just above, slightly above. You see now the risk there is very small, and here is the if you can hold all the way up to this level, here is the reward. You see, so you see how effective this is. You are risking so little but yet gaining more. So it's just about patience. And usually these trades, when I catch them, you just enter, and sometimes they never go in reds to say -$1 or whatever. They just start boom, red, then blue, and it continues to go just like that. So now we have identified the H4 IFC. Let me just move this all the way to that zone. So we have about a minute. Yep, Tuga. Okay. Okay. Okay, yeah. So the reason why I've marked the daily IFC candles as well as the H4 IFC candles is actually to filter out. You see all this, the green line, the outer green line, because people would see, just marking out these. Most people just mark them out, no support and resistance. They don't even know what we consider when marking out these levels. They just mark out, and this is why people miss out on the good entries. They're like, how do you take sniper entries? This is the secret to how I enter sniper entries. In fact, this is about this, some of the information that I'll be teaching you guys, because the lessons that we have with the VIP members is just ending, and we're about to do like a whole lot of what we've learned and putting everything all together, and we see how we can use it in learning. So this is, you see, this is the daily, and I marked all this zone, but when you come to the H4, you can't enter from here. So if you entered from here, all this would be a drawdown. So we go down to a lower time frame. So we are on the H4 at the time, and this is an IFC, right? So you can see from the H4, the market went in and just entered the H4 from there, right? And you see, if you enter from here, the drawdown would have been very small and the stop loss would have been there, and boom, right? That is how we can look at it. So we actually go down so that we can lower the risk we are taking, right? So on the H4, we have actually determined what the IFC is. So the IFC helps me take those sniper entries. And guys, this is significant, right? You've seen how the market behaves when it reaches these IFC candles, right? The market has to stop somehow. And for me, I don't even need a lot of candles, just these, or maybe just one candlestick on the H4. I'm done. I'm out of the market and I do other things, you know, right? But I'm not going to focus more on that. I'm focusing more on the analysis, right? So we've determined this. Everyone else would understand the trend line, right? This is how every trader is trading, right? Yeah. So it is very wise for us, if at all we took a sell from there, it is very much wise for us to put a TP there, because we can see from here, this is where the market has been reversing from these levels, and it's very much wise to put the TP from there. So why are we putting one TP from there? First of all, this is where we have seen where the market reversed from, right? And we have this maybe on a higher time frame like H1, it would actually look like a stop hunt. When people bought from here and put their stop losses just beneath, their stop losses were hunted, and it would actually look like a stop hunt, and it went up, right? So if we have to put a TP, price has to come back to this level and then go up again, right? Let me just, here now I'm establishing the possible outcomes, right? So from here we can actually go up, right? That is what I'm establishing right now, right? But before that, let's now go to, the voice is breaking. So let's, so the IFC is simply, you know, everybody has got these fancy ways that they're using, but, you know, it's just the order blocks, the institutional candlesticks, the sponsorship candlesticks, all these guys that are coming up with these terms and all that, they simply go back to one thing. This is something I've taught everybody else that I'm teaching. Right? Yeah. So let us now go to the H1. On H4, we've identified these areas, right? Let us now go on the H1. Before anything, let us just stick to the H4. There's something that I want to explain right now on the H4. You know, sometimes when you have all this information, sometimes, you know, you overlook the fact that, you know, all these things, you know, sometimes you just see things in your mind and you forget that you are teaching somebody that doesn't know. For me, when I teach somebody, whether somebody is a mentor or something, I teach from the very basics. I don't know how they understand, but I hope from that some people are helped. So I overlooked the fact that, you know, we have different people here. So H4, we've seen this is still in a downtrend. I don't know if people are having challenges. The voice is okay. It's unit okay, right? Great. Yeah. So we've seen from the H4, this was a lower high, lower low. So the market came back, tested in the daily ray there, but then we had the base here. So you see, I use supply and demand. You know, I look at the market. The way I look at the market is very interesting. It's very interesting, and I have all these possible ways. I'm actually saying, why did the market reverse from here? So I'll go on and check. There was a base here, and this is why the market reversed from there. So now it didn't break this high, right? So now what we're looking at is the market to come back and retest that zone. We have the lower high, lower low. We have a lower high because it hasn't broken the structure. It hasn't broken structure yet, right? It has come back. This coming back didn't actually break this lower low. So we have to establish why, right? But then before we answer that question, price went back up and it has come to retest this zone also. So here two things can happen. It can either break or it would reverse. But what we do is we filter out the trade and, trade it as it suits at a time, right? Besides, we are taking very small risk, right? Very small risk. So if you had actually entered this trade in the morning, you could have even exited by now, and this could have, for me, this could have made, I could have made quite a lot of profits, because just here, this move, I caught this move and I made money, right? So lower high, lower low. Here others might think there's a break of market structure. Structure has not yet been broken, right? So we are still gonna go down as long as this high still holds, right? We can only anticipate that the market is going to change direction once this high is broken, right? Yeah. So let's go on a lower time frame. So we see how best we can appreciate this trade and how best we could have entered in the trade, right? So from here, what I would do is this. I use other techniques. In fact, here I had actually, okay, before I say, I think I'm going ahead of time, ahead of my teaching. When you have information in your mind, you have all this information in your mind, and everything is just happening in your mind, right? A student of mine, okay, so we've seen to say, this is our area of interest. I don't know why the markings that I did on the daily and the H4 have gone, but I'm sure they'll come back. This is our area of interest, right? Once the markings come up, we'll see to say this whole area is our area of interest. Why are we going back to the lower time frame like the H1? The H1, what we anticipate, since it's the area of turning point, we anticipate something, that to help us identify to say this is a reversal pattern. Others would see the head and shoulders here, but yeah, it is okay to see a head and shoulders pattern. They would say, okay, Quasimodo and stuff, but here is the thing. Here is how a student of mine would actually look at the market, right? So here, I'm yet to teach the Wyckoff, right? So here is the thing. Here is our area of interest. This whole area is the area of interest. So you can see from here, what we anticipate is to see any reversal pattern from here, or the break of structure to see it's going down. So from here, we had this level here, which is this level, right? What I anticipate from here is that we had almost like the equals, and we have seen this is a Wyckoff structure, right? This is a PSY. If you've not done the Wyckoff, you can do it. It's a good course. This is the BC, and this is the UT in phase B, and this is, we can actually call this the test of this. Or in Wyckoff, it would say secondary test or just test. But then there was that, why did the market just go above, slightly above? We're going to establish that. So what I'm looking at is the market, it hasn't broken this low, but then the market breaking that, and since it has broken that, now a student of mine will know, I've taught this, would know to say, once we've seen there's a break of structure here, we have to wait for price to come back up and test that zone. So now we're going to establish a zone here where we're going to enter a sniper entry, right? We can see here the market is actually breaking structure, right? Yeah. So I'm hoping for that, right? And from there, this is when I can establish, an entry and go all the way. The stop loss will be so tight, right? But then let us look at other factors also. Let's go on the 15-minute time frame. On the H1, we've identified and said it is making a Wyckoff pattern, right? Others that just trade based on what's this? Price action, the head and shoulders. They'll say, head and shoulders and all that. But really, we're looking at price very differently. Okay, so somebody from my class would know why price ended from there, right? This is our, okay, let me just try to reverse this one a bit. Okay, I'm dissecting the market. Okay, we didn't break structure. So here on the 15-minute time frame, guys, we've seen our our IFC is here. I don't know why the H4, I don't know why sometimes this trade view for binary, why it lags behind in showing other things, because initially it is supposed to show. What can I do, guys? Let me go on the H4 again. Okay, yeah. So we've seen that level, right? The H4 IFC, right? And we've seen how we're making the levels here on H4. They don't make sense. But then once we go on the, let me try to use the 30-minute time frame. I hope these markings won't disappear. This is why I hate binary, right? Oh, this is why I hate binary trade view. But then it has a lot of good features. So I have no choice. Okay. So on the 30 minutes time frame, guys, we can identify another IFC. Another IFC is here, guys. Right? We filter it out again, guys. Okay. Now a student of mine now is actually seeing something, right? A student of mine is actually seeing something. I've identified another IFC on the 30, and this is why those that only trade this based on the Wyckoff, they'll enter here. Maybe the drawdown will be little. But then a student of mine that has understood the concept of Wyckoff, which was something that we're gonna be doing, and the IFC, which includes, would actually know to say this is an IFC on the 30-minute time frame, right? And the reason why it had to pass a bit here was because it was simply testing the IFC. So we look at the IFC as an area where there is a high probability of a reversal, and we actually we actually appreciate it by following the IFC candles only, right? We follow the IFC candles only. So now, right, the IFCs are very powerful, guys, right? Okay. So here we can see there is a break of structure. So once there is a break of, here we had the UT in Wyckoff. Don't worry, I'm gonna teach that. I know I haven't yet taught the students that I started teaching. We have the UT here, and we have the BC here, PSY. So we come back to institutional trading. Here, break of structure. You have to wait for a break of structure. Remember what I taught you. Break of structure, which is here, is happening, and what we anticipate is for price to come back up here, and once it comes back to retest this zone, and that is where we're going to put our entry, right? That is where now we'll be taking our sales. So now once we take the sale from there, people know how to actually enter using the IFC. The stop loss is just gonna be a little bit above of this, just a little bit. That is where our stop loss is going to be. So now look at this. So now once this happens, why are we anticipating a move from upward? So now it's not just that once you have anticipated to say the market has to do this, then I enter to say the market is sure that it's going to go up. What we have to do is we have to work with rules, guys. I work with rules when I trade and all that. So now I'm looking at this as a whole base. I'm looking at this as a whole base, right? I'm looking at this as a whole base. So here, what we can actually do is, once it reaches here, I don't know, probably, anywhere in this zone, or just where it reached, it can actually start going up. It can actually continue going up. Let me just, sorry, this is the IFC. From here, I don't know, guys, if I'm too fast, or the information that I'm revealing or the terms that I'm using are a little bit tough. Just bear with me. Sometimes guys, mute your mics. Okay. Oh, sorry, I forgot to mute everybody else. Sorry for that, guys. I really like it when a fellow African, a fellow black person makes it also in the Forex industry. I really like it, whether black or not. For me, I really just like it. I'll just want everybody else to see the power of Forex trading. This thing, guys, this shit, guys, right here changed my life. And I'll just want everybody else to see what it is capable of doing. Okay, so what we're anticipating, since we've identified the Wyckoff structure here, or head and shoulders pattern as everybody else would call it. I don't know the charts. I think I should have a moderator. Okay, yeah. Oh, I'm a bit fast. Okay, guys, I'm too fast. Okay, I'm gonna try by all means to be slow. Okay, so we have a structure here. Since this was our remember on the daily, this whole zone here, starting from here, this zone is a daily zone and it's our target zone. It is our entry for a sell. But since we can't enter, trades just based on the daily time frame, why can't we do that? Because we want to take the smallest risk. So we have to go to lower time frames, and the lower time frames, we understand from the basic price action that lower time frames actually respond faster to price movement, right? So in the lower time frames, we'll be looking at finding or rather discovering something of something that would actually show us to say the market reversing. In this case, we have some sort of a head and shoulders pattern. Others would call it Quasimodo. I don't know about that. You've seen it's even going up. It's still going up, ne? Yeah. Okay. Yeah. So or we can actually use the Wyckoff methodology. The Wyckoff methodology presents quite a number of structures. This is something that I'm going to teach, and I'm very much excited to teach this topic. I like it by far, right? I don't know why people are raising hands. Okay. I don't think there's anything significant. Okay, yeah. So we're waiting for price to go back up, and when it goes back up, we'll be waiting to enter from there once it tests the IFC. So now, guys, I'm now giving the rules to say on the entry, rules on the entry. For me, I'll only enter a sell once price goes there. Of course, the market might not reach there, but the important thing is that you have to stick with the rules. You make rules before you enter, right? So I'm looking at all the possible outcomes. So here, if it happens that price reaches there, this is when I'll only be entering. So I'll only be taking a sell once price reaches the IFC to test it. Because why do we think price would actually test the IFC? Because here we had some sort of a liquidity there, and here there's a break of structure, meaning it might go down, and boom, it's going up to retest the IFC. So I'll only enter once price reaches the IFC. So we can take an entry from just there where there is that open price and also 50%, right? We can enter, and the stop loss will just be slightly above there, right? So we have a very small risk. Imagine, let me just put this now. Remember, our target was based on the daily. Now remember, let's see if you enter from there, right? And here is your gain, right? Here is your gain. I hope this line is the line that we made as the trend line last time, right? Where is the, okay, let me just reduce this. So now let us look at this, guys. I want everybody's eyes to be open to the truth in trading. Trading is very simple, guys. Trading is very simple. You see me doing all this, raising small accounts and doing that, and I'm very much confident when I do that. Why do you think? What do you think causes that? It's because of this. So you've seen the risk that I'm taking, a very low risk. Even if you are to use 1.2 lot size here, the risk will be very small. But here is the outcome. If you are to hold a trade, if this was to come out, to be truthful, or rather to be, if it plays out our way, this will be your gain. And look at that. What the risk reward? What is the risk to reward ratio? I don't know how you calculate the risk to reward ratio using this trade view, but for me, I calculate in terms of money. So for instance, if I have to risk here, maybe it might be $10 or $20 if I have to use one lot size. And here, all this, I would actually make about 400 and something on one trade. You see, this is how I'm able to raise smaller accounts and make them big, because I'm taking trades with the homeboy girl from TZ. Okay. Oh, okay. Regan from Tanzania. Okay, great. What's the lowest time frame to consider while taking an entry? Okay, please, David, just hold on to your question. I'm going to respond to the question once I'm done dissecting this asset. Okay, for the sake of time, we're just going to dissect one asset today, right? Yeah, just one asset, right? Okay, yeah. So now, once it reaches there, I'll be taking a sell, and this will be my last TP. But of course, I would also put the TPs elsewhere, right? Remember, okay, in fact, that's not the last TP. What did, okay, yeah, that's the last TP. Okay, I don't know why is this. Okay, we had earlier put a trend line here, right, guys? I don't know why binary trade view reacts in this manner. I think, we can, somebody can come up with a trade view for MT5 and put all these functions in MT5. Trade view, binary would actually die if we had to do this. You see, okay, this is where we put, right? So now look at that, this risk and that reward. This is tremendous, guys. This is tremendous. People think it's magic. It's not magic, guys. It's because of these concepts that we use to analyze the markets, right? This is the daily IFC. So if you had entered from here, this whole thing would have been your risk. But we don't want that. We filter out and we go to the lower time frames. And what are we looking for in the lower time frames? We're looking for any reversal pattern, any schematic of any distribution schematic and all that. That is what we're looking for, right? That's what we're looking for in the trades. Others, here I made money, yeah, because of this. Here, there was something interesting here. But I knew it was going to come to retest this zone. So once it comes back, I'm going to enter and make money, right? It's as easy as that, guys. Very easy. Very easy stuff and very easy and very good stuff to do. Okay. We've seen the Wyckoff structure playing out. Let's go now on the 15-minute time frame. 15-minute time frame. Okay, I don't know why binary is taking long to. Okay, we're actually now on the 15. So on the 15-minute time frame, you saw on the H4, the structure was not yet broken, right? The structure was not yet broken. But here, we've seen the break of structure. So somebody that is trading based on price action, they would actually see this. They would say head and shoulders pattern, and boom, they put a trend line there, and they say this is a retest. To say we now enter a sell, right? That's what everybody else is doing. That's what everybody else is doing. Let me just delete this error here. Here, guys, what we're doing is really, when you establish one outcome, it doesn't mean you have to stick to only one outcome. So for me, I would sometimes put all the possible outcomes. So somebody would trade based on that, and they would say, okay, it's now time to enter, and they would sell and probably maybe put their take profit here, right? So that would be another outcome of mine. Wait. That would be the take profit. That will be the take profit, guys. Yeah, of course, I'm using take profits. The way I'm putting the TP levels is based entirely on the IFCs, because I know the power of IFC candles, right? That is where a reversal occurs, right? Yeah, so somebody would actually look at it and say, we are now selling, right? Which is not a bad idea. But why can't I take a trade from there? For me, I normally hate taking trades like this, because here I know I have a base here, and here there's another IFC, and I can't just take it from here. I would rather catch the trade. If I missed this entry here, I would wait for a retest like this one, then enter. Yes, these are the only trades that I would take. So people are trying to force these things and all that here. They would enter and all that. But looking at things, I don't think price would be going down anytime soon. Even if it goes down, guys, I'm not taking this trade. This is what differentiates me from most of the traders. For me, if I stipulate my rules, right now I've given one possible outcome and this is another possible outcome. But of course, I'm removing this possible outcome from my entry because I know here anything can happen. What if it just spikes and it goes up? Because I've established to say it should go up on that one possible outcome, right? So I'm not going to take this trade. If I had taken it from here, I could have held and maybe just put the stop loss, just protected my profits, right? Yeah. So this is why I'll not sell from here. Everybody else is looking at price like this. And the brokers, this is the information that is readily available. The head and shoulders pattern, how to trade it. The brokers have this. Why do you think this information is very much available? This is the one question that I asked myself. Why do you think that this information is very much available to almost everyone? Almost everyone is using the trend lines and stuff. Why do you think it's very much available? Don't you think the brokers, the market makers know of these methods? So in order to level up, you need to acquire the knowledge that is not always available. And this is what I'm showing you. Of course, the knowledge that is very much available sometimes may work, sometimes may not work, right? But I don't restrict myself to using just that knowledge. Here, I'm not going to take an entry and I'm going to enter once price goes there. Why am I not taking a sell from here? Okay, it will end in 10 minutes. Okay, great. I think I'll be done in 10 minutes because I have to do other things also. Why am I not taking an entry from here? I'm not taking an entry from there because here, if I have to risk, when you trade based on the head and shoulders pattern, you have to put your stop loss here, right? Those are the definite rules. Others will put their stop loss here. But this is too much of a risk. This holds on. The risk is too much. For me, this is why I just send small signals, maybe one signal a day, 2 signals a day, because I'm looking for trades. Even if you lose, you have to lose a small amount, guys. I admit sometimes you might take a loss, but when you take a loss, like for instance, if I had entered from here, right? If I had entered from here, from this IFC, here I could have taken profit. It came back to retest, I could have entered again. Here I could have taken profit. Why would I have taken profit from here? Because I have these levels, right? These are support levels. So I'm waiting. So now I've established, and this is what I'm waiting for. If price just does like this, if it continues to go up and goes to that level, this is when I'll be selling, right? This is when I'll be selling. That is all. So now, Wyckoff also says, once this happens, if we look at this schematic, which says this is the BC, this is the UT in phase B, and this is the LPSY, we would actually consider this to be maybe something like, LPSY, where the market retests, and it can actually sell from here. It can actually sell from here. Yes, somebody that would sell would not be wrong. They would trade based on their rules, right? But for me, I don't just feel it's ideal. I just love sniper entries. When you get very much used to sniper entries, you end up, sometimes for me, I can't take these trades. I can't take this trade because it's not a sniper entry. And for me, if I have to take a trade, I could have caught it from there. And I wasn't just available. I had a hectic day. And I didn't catch it from there. Right? This is why, I can't take a trade from here. But actually, others might be selling from here. But before you know it, you might just find, it spikes. For me, so I've established the rules to say once it goes up there, that is when I'll be selling. If it doesn't, well and good, I'll be all cool. In fact, we have another base that is here. So this also becomes my POI. POI is just point of interest. This is another base. Why do we think market reversed from here? We have an IFC candle. We have an IFC candle. We should have an IFC candle from there. Here, we have another IFC candle, right? This is why the market reversed from there. So if the market has to come back up, look at this. Look at how I've narrowed down the stop loss. So initially we had determined to say we'll put a stop loss there. But then with this analysis, the stop loss will be there. So you've seen how I've narrowed down the stop loss, right? And when we have to take our profits, it will be first profit there and all the way up to this zone. So now let's just try to look at this. I'm not teaching, guys. I don't know if I'm not trying to teach. No, I'm not trying to teach. Let's just look at this. If the trade plays out my way, because I'm actually waiting for this trade. If it plays out my way, it comes back to that zone, right? And my stop loss will be, and my stop loss will be like, if it comes back to this level, and my stop loss will be there. So this method actually aims at reducing the risk and acquiring more returns, right? That is our last stop loss. Now look at the risk to reward ratio, guys. Even if people can't clap for you, here you take this trade, your grandmother will be very proud of you. like my kid. This is what's up, right? You see, so you've seen how I've reduced the stop loss. The stop loss will be there. Just let me put a line. Let me put a line. Let me put a line. Let me change the color of the line. Let me put blue. Yeah, you see this line. This is where to say I adjusted the stop loss, and I'll enter from there. And you've seen I'm risking, you know, if this trade plays out my way, it's going to be awesome. The risk is going to be very minimal, and yet the reward is going to be very high. So basically, guys, I think I'm just going to dissect one asset today. I wanted to do 4 assets, but no, time is not with me. I have to do other things. Let me just see the charts. Let's see. Let me ask. Let me just check the. Let me just ask a few. Let me just answer a few questions from the comments. Do you also use trade alerts or sell or buy limits? I don't normally use buy limits, or I don't use pending orders. Let me just mute everyone. I don't know. I don't know why people would enter the meeting but still be talking in the background. At least try to mute your mics. So this person is saying, Professor Bliss, do you also trade alerts? Do you also use trade alerts or buy? I don't use pending orders. I don't use pending orders because the reason why I don't use pending orders is that sometimes when the market would actually, like for instance, the market would actually reach this zone, and looking at the momentum, I would think, no. Like I wouldn't put a pending order because sometimes the market would reach here, and if there is anything here on the lower time frame that has changed to say showing a bullish momentum, meaning that pending order sometimes would make a loss, right? It would make a loss. But then, so I love entering just when the market is there. I enter because I'm not trading alone. I have a team on my side. So sometimes I'm sleeping and the guys are awake. They will tell me the price is there. And, enter, just go in. Sometimes we just take a few candles and we're out. We've made a lot of money, right? Which time frame is best for market direction? Guys, this question, okay. Let me, by order. Oh, I don't also use trade alerts, but my friends do use them. For me, I just feel lazy to use them. It is important that you use them. Yeah, you can use them. In fact, I'll start using them. Yeah. Thank you for reminding me. Please explain IFC in simple terms. So an IFC, I don't know if you know about institutional trading and all that, but an IFC is simply somebody from my VIP group to give a simple definition of the IFC. I want to see somebody from my VIP group give a simple definition of the IFC based on what I've taught. So which time frame is best? Yeah, please do. Somebody volunteered to give a definition of the IFC. Okay.
An IFC, right?
Yeah.
So an IFC, this is the last either downward or upward candle, which precedes an upward or downward movement.
Okay.
Sometimes called the order.
Okay. Yeah. Very much correct. Yeah. This is just the last upward or. Okay. Okay. This is just the last upward candlestick, or rather downward candlestick that precedes a movement either to the upwards or to the downwards. Sometimes it's called an order block, institutional candlestick, and that I feel these guys just come up with all these names just to, I don't know if they want to feel like they're geniuses and all that, but they actually mean the same. In my understanding, they just mean the same. So Joseph is asking to say, what's the difference between the IFC and the order block? They're just the same in my view. It's an institution funded, yeah. PZM, okay, this is Peter, yeah. So it's an institutional funded candle. This person is from my group, yeah. So another question. What's the lowest time frame to consider while taking an entry? Okay, so guys, price is fractal. Yes, Mr. David, thank you so much for the question. Price is fractal, right? Yeah. So if you are trading volatility indices, you can even use the 1 minute time frame, and you can see this structure from the 1 minute time frame, right? This structure, you can see Wyckoff structures, reversal patterns in the 1 minute time frame. But boom and crash, the way it reacts, it's a special index. So for me, I don't go lower than the 15 minute time frame. Sometimes if I'm using TradeView, I use the 10 minute time frame. But really, I don't go any lower than the 10 minute time frame. So I'll use the 15 or the 10 for taking entries. Sometimes based on the structure, sometimes I'll use the 30. So you have to start from the daily and you come back all the way to the 15 minute time frame. Sometimes you might catch the trade based on the 30 minute time frame. But to reduce your risk, you might actually just go a bit down, maybe 15 minute time frame, and you enter the trade. Yeah, any other question? You have less than a minute. Have less than a minute. Okay. Okay, yeah, so that was it. We've come to an end of the session, and thank you so much for stopping by to listen to this free analysis. And I hope we'll have more of this if time allows.